When inflation is down, so it will be the interest rate. And let's look at the gold market here. Is that in the 80s to the year 2000, so is the gold as well. Gold is commodities, and in my opinion, gold is still one of the best inflation hedge commodities around the world. And when did the inflation start to pick up? As we look at this gold market here, the inflation start to pick up since the year 2000 to current. Now, and what happened to the last 20 years for this interest rate here? And we could see that the last 20 years in this interest rate demonstration, the interest rate stay stagnant for the last 20 years. Now, I would classify this as the period of borrowed time. Now, later on, we're going to describe about what is this borrowed time and what is the cause of this borrowed time. As we could see here is that the interest rate start to move up. And this is what we're going to discuss here today. As the interest rates start to move up, inflation start to move up, what will happen to the gold market? But before we get into this topic, please take some time to look at the disclaimer down here. And let's discover what happened to the last 20 years between the inflation and interest rate, why it is so stagnated. And if you're going to compare to the past where there's healthy volatility, we could see that the last 20 years it was abnormal. And this borrowed time, I call it is because of a need of easy money policy. And to do that, it means that there's always an increase of the money supply, there's a need for money, and as well as you have to lower the interest rate. Now, during the last 20 years, there are three major events. Now, the first events for a need for money, it is because of the 2003 of the Middle East War. There's an expenditure, there's a need of money, so there's an increase of money supply. When there's an increase of money supply, it will cause inflation. And then we have the subprime crisis in 2007 and 8 around here, followed by Wall Street meltdown, and then the last leg, it was Lehman crisis. And to rescue the Wall Street, so once again, the Fed have to increase the money supply to save the Wall Street by lowering the interest rate for many years. And I would say the last leg of the need for money, it was during the COVID-19, that was in year 2020. But I also believe that that could be the tipping point that all things went wrong. Inflation, interest rate should be on the rise. The good time of a downtrend over the last 40 years may be over, and the uptrend of interest rate may be just at the beginning. Now, what happened here, this breaking point, it is the after effect of the accumulated easy money policy. This is what I'm expecting for the interest rate in years to come. And for the gold market, it will be the same as well. With high inflation, gold will continue to appreciate. And why is it so? Because gold, it is still an inflation asset. Let's also take a look at the technical reason why the interest rate have transit from a bear market to a bull market. It was because of this downtrend line. And you could do the same study on the 2 years, 5 years, 10 years, and the 30 years bonds yield as well. It will give you very similar reading. So in our previous tutorial, we spoke about how to construct a downtrend line. Basically, the two rules, they are: first, we try to find at least 3 significant peaks. And then rule number 2 is that we join the dots together. Now, why is it important to construct a downtrend line, a classic downtrend line? Because when it is being broken, we could really take it as the trend have transit from a bear market to a bull market. And this is what we're expecting here. The bull of the interest rate rise, it is at its beginning. And for the gold market, since the inflation is going to be intact, the gold direction will still continue to rise. And I will continue to look out for buying on dips opportunity. Investing, I'll continue to hold on to my mining stocks, my gold ETF, and some gold related fund. And as for trading, I will continue to buy on dips as well. Sometimes I will do sell short, but knowing that the main trend is still up, my focus is to buy on dips. Trading in the COMEX Gold, the mini gold, sometimes I consider, about a gold that I really like is called the micro gold. Now let's take a look at what the system offer here. And I would like to look at here, and later I'll introduce you how I identified the primary and secondary uptrend line. So for the trading the gold, I will also include some of the information below. Do look for that. And let's go back to the trend line. And I know it's a bit confusing right now for this trend, but I'm using this feature, the trend, to help me to identify where is the primary uptrend line and the secondary uptrend line, where the past video I described about it. I saw that this is a primary uptrend line and secondary uptrend line. Now I'm going to call this off. And I'm going to draw the primary uptrend line, where the previous video we discussed about that. That's called the primary. And why is this important? Because it will help me to look out for buy on dips. And this is what I call the primary uptrend line. And I'm going to type this in, the primary. This is my primary uptrend line. And then the other, I'm just going to shift this away for a short while. And the past few videos that we described about, because of this two bottoms, that we also constructed the secondary uptrend line as well. And that's where we spotted that the last retracement, it was at 16600 about here. And today is still on the way up. And I'm going to put back up this primary uptrend line. And this is what I call the secondary uptrend line. Just going to put this in. Secondary uptrend line. So once it's being broken, the next dip I'm expecting is about here. But secondary uptrend line, the support, the retracement to me is good enough. And that's what I'm seeing with the continuous inflation intact. Lightly, this is what I'm seeing here. And I'm not too sure you're seeing this, but I'm seeing that there's some resistance at about 2000. About here. I'm just going to draw a trend line here. And this is what I'm expecting for the gold market to perform. We could see that the resistance is about 2000. And maybe when it tests 2000, there'll be some resistance. But ultimately, as the inflation continue, I believe that you will break and move up from here. I've included some of the past tutorial on inflation and gold, and its links below. So keep watching it again and again. You too can get into the market with greater precision. I always enjoy studying the correlation between the markets, and I hope today's sharing it will be helpful in how we invest and trade. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.